GM, if you are a high time frame trader, you must have patience right now because it is currently a scalpers and day traders market. Yes, Bitcoin is retesting the 50-week EMA, which it has found support at previously this cycle, and it already has produced a decent bounce. But the difference is we've had a market structure break on the weekly. The last time we had a market structure break on the weekly was over here. So can you see bounces and overall chop in this zone? Yes, we could. We could bounce all the way up to this weekly market structure level over here at 114.5k and still remain in a bearish downtrend. You'd have to reclaim this level with a close on the weekly to potentially flip this into what could be a potential early uptrend. But until then, we've had the MSB. This was a previous time we had an MSB. This was last cycle's previous times we had an MSB. Remember, that's the low that led to the most recent high. Low led to the most recent high. So while Bitcoin is unlikely to go down in a straight line, because I think that's what everyone wants, that in itself makes it more likely to be choppy, have bounces, and offer those beautiful mean reversion and day traders, scalpers environments. So the reason for that is simple. This Wyckoff I've been sharing with you guys, distribution is playing out. We back tested 107.2k as resistance over here. So the longer we spend chopping at the lows, the more likely it is to potentially break down again. So let's look at some of the lower time frames. Well, on the daily, we have a range over here. You can see the 12 and 21 EMA bands, they have been your resistance. That's very clear. We've not been able to reach the 50-day EMA, this purple line yet, which does show that sellers are showing up on bounces. So I think from here, if you can close above that EMA, the 21 EMA, then that sets up a move to the 50 EMA. And that is what's going to actually set up your better shorting opportunities. Because right now, if you get short over here, where does your stop go? Does it go here? Does it go here? Problem with that is you can still get taken out, like this example here, and your overall idea can still be right. So that's why it's not offering good setups on the short side, even though this is in a daily downtrend, because you need to wait for a bounce and clear rejection. Now on the long side, this also isn't offering the best setups because right now you have Bitcoin at the lows here rejecting the 12 and 21 bands. So when it comes to the daily time frame, what I'm really waiting for is a sweep of this summer low. That's my next area of interest to look for longs, is this liquidity over here, which I think should have some sort of reaction. And that can be played for a quick bounce. If we see a good reaction, then maybe that can turn into a swing trade. But initially, I'll be targeting a wick to take all those stops out on the daily. And that overall would be holding this candle over here. So the idea is you fully fill in this gap, which we haven't fully filled in yet. That fully fills in with the lick sweep of the summer low. That can offer a high risk reward setup and is one idea I'm looking at when it comes to longs on the daily. Because until then, this is a daily downtrend. Unless we can make a move up to the 50-day EMA, I'd not be looking for anything trades-wise because it's just not the best risk to reward now here. So if we get up to the 50-day EMA, that's where I'd be looking for some sort of short setup in here where you do then have good risk to reward as your stop can go above the high and you can then target the lows. And that would look something like this setup over here. So on the 4 hour, that would be filling in this gap. I'd set half risk on 2 orders to have a stab at it. One on the full gap fill, one on a half gap fill. And that's the 50-day EMA over here, which is what I'm playing. So move up into there, quick wick up into there, like these examples here, would be the setup I take there. Otherwise, I'm just going to let this consolidation play out. It's very choppy right now. Bitcoin is coming into its lower levels like this liquidity. This was a chart I've been sharing since September. It played out beautifully for the bulls for some time, and then all of these bullish levels flipped into resistance. And now we've been breaking down through levels. You have the 50-week EMA, which is right over here, trying to provide some support. And when we look at lower time frames, what are we seeing? Well, yes, we're bouncing off it, but all of these bounces are getting sold into so far each time. And you can see the levels are playing out pretty beautifully. You got the range lower one of 7.2k, resistance. July low, resistance on the back test. So now if we break below this 50-week EMA and that October 10th liquidation wick level over here, then that's when it potentially sets up a move to the summer low, which is why I'm interested in a potential long around there. So let's take a look at the order flow to get a closer look at these levels. What have we seen? Well, I think we got to refresh this. There is some new price action. Yes, there we go. So overnight, we sold off. I did a bunch of updates in the Discord about this. So I said there's a big buildup of shorts, in particular of the New York Open. I said you can see that through price falling and open interest rising. Both perp and spot CVD, this bottom one over here, has been down only. So that means perp futures are selling, spot are selling, and price is breaking down. So it's in harmony, meaning bears are in control. So both the data and price was in agreement. This was back at 102k. And that told me that sellers are right and in control until bulls can reclaim the breakdown level. So what happened was we got a further flush down. Bitcoin couldn't hold above the weekly open. We got the path I mentioned, and that put us right back at the 50-week EMA. And then I mentioned to you guys that reclaiming the breakdown level at 102.4k can trigger a short squeeze. That's exactly what we saw in the morning. We reclaimed 102.4k, triggered that short squeeze. To the downside, you got the daily open at 101.6k, and to the upside, you got the weekly open at 104.6k. So let's have a look at those levels. Well, downside, daily open, we dumped into it, produced a bounce so far. That is going to be a key level intraday today, where if we go below it, I'd expect sellers, bears to be in control and potentially lead to a move lower. And for bulls, they need to reclaim this weekly open. It's as simple as that. The week's currently red for Bitcoin. So a red week, bearish week, until we can get above 104.6k. And really in between there is a chop zone. We've been messing around with this breakdown level at 102.4k. When we got above it, we got the short squeeze as I mentioned, but now there's no demand coming in behind it. New York session has started. Question is, can we see the spot bid return and provide demand after shorts have been squeezed? Because if you can't, then as soon as shorts get squeezed, price will just mean revert back down. That's mean reversion conditions. So when we take a look at the ETF flows, you're seeing since the 29th of October, just net selling from the ETFs in quite large amounts. You got 500 billion, 500 billion, 200, 200, 560, 140, some buying 240, some buying 520, but nothing to outweigh all of the selling that we're seeing. So Wall Street on the New York Open, they are choosing to sell at the moment. They're not buyers as it stands. And well, why is that? If you simply look at the charts, it's because we've had a market structure break. It's because we've been distributing and now the distribution is playing out as per phase E. So while again, doesn't mean there's great short opportunities here because you don't have the risk to reward, it does mean that if we bounce, that's where you want to look for potential shorts. Or if we go lower, that's where you want to look for potential longs in those high risk to reward areas. And that's what I'm going to be doing from here. Otherwise, I'm chilling. You guys know since August the 11th, I exited my entire Bitcoin cycle bag that accumulated throughout 2022 to 2024 at 121.1k. So I'm hedged for all of this. If we do go lower, I'm welcoming it because we do have more opportunity coming if we do go lower. And that was a big reason why I took this long setup the other day. So we reclaimed 50-week EMA, got back in on a pullback on a Saturday, took profits. Then I added to the trade with a compound using the profit. So risk-free, I got plus 0.65R on the first TP. And I used that 0.65R as my risk for the compounded trade, moving both the stops up. That allowed me to maximize my opportunity for a potential uptrend, potential upside, while minimizing my risk, something I teach inside the school. But it didn't play out. And that shows me the fact that it didn't play out and I ended up break even, that the markets are not ready to trend yet. We're in mean reversion. We're in a day trader's market. There simply isn't enough demand. Sellers are still strong right now. They're showing up at the range low. Remember how long the range low was support for, guys. Remember how many times price bounced at this range low and you reclaimed it, led to rallies. Now it's being backtested as resistance. It's a clear change of character. You can't ignore it. You have to call the charts for what they are. This is why we prepared for this. This is why our high time frame portfolios have been risk off. Because now we need to see what way does this consolidation break. We're not respecting the bullish gaps, guys. We traded right through him, backtesting him as resistance. Couldn't hold this bearish gap as support on the retest. Couldn't get anywhere near this bearish gap over here. So now you're looking at this 50-week EMA as your last point of support. If it can hold, then great. Maybe we can have some more bounces. But if it can't, this is now a consolidation within a downtrend. And question is this going to be redistribution? If so, you're looking for the break of this box to lead to another leg lower. Or is this reaccumulation where you then break of this box leads to actually higher? That's the question. And right now, sellers are showing up. And within the box, it's going to be choppy. It's going to be mean reversion. But if we break below the box, then you're looking at a potential leg lower. So watching that 50-week EMA very closely. That's what I'm looking at on Bitcoin. That's the trade setups that we're looking at. Very choppy market right now. But play the levels as they come. That's how it's going to be. And for your high time frame buyers, have patience, guys. We're setting ourselves up for some generational trades. You guys got to stick with me. I'm going to be dropping all of my buys, everything I do, over the next few years. We're going to absolutely kill it because it's those high time frame buys that make up for our generational trades. We all know that, and could be setting up for some potential opportunity, because on the monthly, we've lost October's low here on the Binance chart. It's not looking great. When you go to the weekly, again, not the best reaction so far from the 50-week. It's not like before where you have these huge green candle reactions. Every time it's a green candle reaction. This time, red candle, and now we're trading into it the exact following week, which is not something we've done before. So keeping an eye on the high time frame charts. Bias is for distribution or down on the high time frame, but on the low time frame, you're looking for those high risk reward areas if you are looking for longs and shorts. So that's the Bitcoin update. When we look at Ethereum, what are we seeing? Well, Ethereum has been in a heavy downtrend really since it had its false breakout of the all-time high over here. Sellers have been showing up and sellers have been in control. 50-week EMA has not provided support because ETH has not been in a trend. So now you're looking at ETH and saying, where can we go from here? And to zoom into the lower time frames for Ethereum, we will go to this chart over here, I believe. No, not this chart, but we will find the ETH chart with all of our price data on it. There we go. Monday's range. Looking at Ethereum. So where did we reject from? Well, exactly the weekly open. I said you've got to flip the weekly open if this is going to be bullish. But what did we do? We rejected right at the weekly open when we tried to reclaim Monday's range. ETH has been, of course, following Bitcoin. Crypto markets correlated, guys, so no surprise. These gaps that we had on the way up, I mentioned how inefficient this move was. It was likely to fill in, and you didn't respect the gaps, which was your biggest tell that this is actually more likely to be bearish. So weekly open, such a key level. We're below it. We're rejecting it. Sellers are showing up there. And now you got to look at the lower targets. So you got this yearly open. You've got this 50-week EMA, which is also around this zone. Is price going to find support there again? That's the question. It has found support there a few times now. We set a trap below. You have this wick, which creates demand over here. Reclaiming the yearly opens led to a beautiful rally, but it's not good to see so soon we're coming right back to the yearly open. That really has produced a pretty poor reaction considering that is a yearly level. That's literally the 2025 open. So I wouldn't be a buyer if we do come back to the yearly open. I think we're more likely to actually then have a bias for down and head towards most likely 3.2k and take you back to the higher time frame chart on ETH. Simple. What are we seeing? Well, you're clearly in a downtrend. Bands are red, they're being back tested as resistance, so until these bands can flip green, bias is for chop, if not lower on ETH. If these bands flip green over here, then sure, we can look for longs, because generally, when the bands flip green, that's a pretty good signal that maybe there's going to be some swing trading conditions. Sometimes it gets choppy, but nothing's perfect, nothing works 100%. Generally speaking, it's better to look for swing longs when the bands go green. You get some extended upside. And the one rule that is certain is when the bands are red, that's not your optimal time for swing longs in an uptrend. When the bands are red, not the optimal time. Markets can be as simple as that if you let them be. So bias is for downside. You have had redistribution after a large distribution at the all-time high. Sellers are showing up here. So that's just is what it is for Ethereum. You started filling in some of these gaps. So could we see these gaps actually fully fill now? That's the question. Obviously, this gap fill produced a bounce. If we lose that gap, then you're heading towards some of these lower gaps over here. And really, again, it's simple. Once these bands flip green, you can look for swing longs. Until then, day traders market, that's how you want to play it. Could we have a rally? Yes, we can. We can definitely have a rally to this 50-day EMA. That will start by closing above this 21 EMA around 3.6k on ETH. But to flip it into an actual potential uptrend, you need the bands to go green. And it's the same for Bitcoin, guys. So you see Bitcoin, it's dumped from its FOMC levels. But point being, if you're going to see Bitcoin go into an extended upside, you're going to see these bands go green. That's what I'm waiting for. That's the earliest trigger that we could be looking for potential swing longs, is if these bands can actually cross and show that there's some demand. Because again, when bands go green, that leads to upside. When bands go green, that leads to upside. Sometimes it leads to fake outs, but if you take the setups each time when the bands go green, or you build a system around it to optimize the setups, you will catch the big extended rallies. Again, you will catch the big extended rallies. Bands go green over here, leads to the big uptrend. But one thing's for certain is when the bands are red, that is not when you want to look for swing longs. You get all of this price action, or even this choppy sideways price action. This choppy sideways price action, or right now, this downtrend. Until they go green, there's no trigger or signal to be looking for high time frame longs. That's why you have to be patient. It's a day trader's market, and that is how you want to play it. So that's the crypto market. Look at Bitcoin dominance quickly to see what's going on. Well, very choppy, slow, grinding, higher. Not much to report back on Bitcoin dominance. Look at the wider market, look at gold. So gold's been flipping my levels. Mentioned this yesterday. You got this beautiful consolidation. Broke out, followed the green path, flipped 4.2k, and I said that can lead to some of these gaps filling in quickly. We've almost filled in the first gap already. And this is a big reason why Bitcoin's been not so strong, because gold's rallying. You know, cause and effect, guys. When gold rallies in the short term, Bitcoin consolidates or dumps, and vice versa. So seeing gold actually have some bullishness, start to fill in that gap, flip the 4.2k level, led to a beautiful move. That's why you're seeing Bitcoin, crypto have some weakness, but also because stock market's been where it's all at. Stock market's been producing new high after new high after new high, while crypto remains in a downtrend. So stock market, you see the daily 50 EMA actually holding super nicely. So weekly chart continues to make new highs. Go to the daily, you see the 50 EMA providing the bounces, producing new highs. Until that stops, expect it to continue. If we do close below the 50-day EMA, which we haven't done in a long time now since the tariff crash, then maybe you can expect some extended downside where a lot of people are going to probably expect crypto to crash because that will get the headlines. Stocks are crashing. What's going to happen to Bitcoin? But I think that's when you then see crypto hold up relatively stronger. And that's when your eyes it should be open for potential longs on crypto. And it'll be much like this tariff crash where stocks just absolutely nuked, whereas Bitcoin at the same time actually bottomed around here. If you get both charts up for a second, let's get Bitcoin USDT. Let's get new price scale. And let's do this. Let's get it on candles. I want to show you guys something. So here's Bitcoin and here's the stock market. You can literally see how stocks had a leg down and a new leg down. And in that new leg down, Bitcoin just went sideways and formed its final reaccumulation before higher. So yes, crypto tends to be weaker than stocks in the first part of a downtrend, and crypto actually breaks down first. You can literally see stocks only broke down on this day over here, whereas crypto had already broken down some weeks before that. But by the same nature, crypto has already formed its bottom while stocks still hadn't, and they were still crashing. So while you're seeing Bitcoin breaking down from its key levels over here, while you're seeing that, and stocks haven't broken down from their respective key levels, and they're actually gone up while Bitcoin's gone down, eventually, when you see stocks pull back, and then you see crypto relative strength come in and Bitcoin failing to go lower while stocks are aggressively going lower, that's going to be when ears are open for high time frame buys. And I'll be reporting to you guys exactly with what I'm doing in the Discord. So guys, if you've enjoyed this video, drop a subscribe, turn that bell on so you get notified for my videos, and drop a comment and like if you appreciate the content. Really helps me out. I read every comment. You can Telegram me, drop me a message if you want mentorship or have any questions. I'm replying to you guys as soon as I can on there, so that's in the description. I'll see you guys in the next one.